Okay, welcome back here to wrap up the first hour of the weekend edition of the Korelin Economics Reports. I'm Al Korelin. Appreciate you joining me. As you know, this show in its entirety is originating from the Cambridge House Vancouver Resource Expo. My humble opinion, this is perhaps the best show in Canada and certainly one of the best shows in the world. I've been taking part in these things now for the past 20 years or so, and I'll tell you, no one could be prouder than me to be a part of this. Something else I'm really proud of is I have a really good friend with me right now, James Turk. James he's a little bit younger than I am, and I hate to admit it, but he is a mentor, for lack of better terms. James is a former banker, as I am. James is, in my opinion, the foremost authority in the world when it comes to gold and silver. Goldmoney.com, which I believe your son is now running, is a phenomenal organization, probably the best way to invest in gold if you don't want to keep the bars under your house. This man is a wealth of knowledge. He's on the show on a pretty regular basis, and it's great to have him with us. James, we did a show back probably first of the month where we talked about your predictions for 2012, big picture, and also in terms of the gold market. I want to start out a little bit with the gold market because the comment you made in the first weekend show in January was that Katie barred the door. This is going to be a huge year for the appreciation that we're going to see in gold.
Yeah, I still believe that. And also in that show, I was talking about the low for the year was probably going to be the first week of January. And since then, we've been moving further and further away from the lows we saw then. And with each passing day, the probabilities improve that indeed was the low.
Yep.
And the thing, Al, that I think everybody has to focus on is that the factors that have been driving gold now for 10 years in a row, they're still there. So it's not saying that something new is going to happen or the problems have not been solved. And as long as those problems are not solved, one has to be optimistic about the gold price. And to me, it's a very simple way of looking at it.
Let's talk about the problems that need to be solved. Okay, I'm completely in your camp on this one. Let's talk first about the situation in Europe. Do you think the market has already pretty much priced that in? My humble opinion is absolutely not. I don't think the other shoe's dropped yet.
Yeah, no, I don't think the other shoe has dropped yet either. The big problem is that there's still a lot of losses in the banking system in Europe.
Unaccounted for.
Unaccounted for, exactly. And what they're trying to do is to generate enough profit and revenue and economic growth to sort of, over time, write those losses off. And it's a tough battle that they're fighting. I'm not so sure that they're going to succeed in that. And as a consequence, confidence in the banking system, and more particularly confidence in the euro itself, continues to erode.
Well, it really does, and kind of the argument that extends from your comment right now, a lot of my colleagues are saying you're going to see some real strength in the U.S. dollar, and I say, well, maybe, because it's really, the U.S. currency is the best of the worst, but I don't see, quite frankly, that as being a long-term trend.
Yeah, I agree with you completely. Just because the euro's got problems and people are looking at the dollar as an alternative, that doesn't make the dollar a sound alternative or the right choice.
I agree.
In fact, there's something interesting that's happened. Most of last year, when the problems with the euro were growing and people were focusing on other alternatives, the dollar had been strengthening and gold was, basically soft or going sideways. That's changing now. The dollar is still relatively strong compared to the euro, but gold and silver both are strong relative to the dollar.
Exactly.
And I think that's an important indication that people are starting to look beyond the dollar. When you want to get out of a national currency, you go from the euro. You can't go to the Swiss franc anymore because that's tied to the euro. You can go to the dollar to a certain extent, but the dollar's got problems. So where do you go? You go to physical gold or physical silver. And I think that's what the market is starting to differentiate now.
Well, continuing on with the big picture, the issue of this big picture, a lot of people are questioning right now whether or not what's going on in the U.S. economy is still a factor. Now, this sounds funny because, I can't believe that anybody would even ask that question. But let's look at the banking sector, for example, in the United States. The banking sector, long story short, I think is on its knees. In spite of the fact, I know that Wells Fargo came out with some pretty good earnings for 6 months, and they're saying that, our mortgage lending department is strengthened, et cetera, but you and I are a couple of ex-bankers. There's an awful lot of ways that you can make numbers say whatever you want them to say.
Yeah, and in fact, based on what I've seen, there's been a lot of accounting gimmickry within the banking system by adjusting anticipated losses. You can play around with reserves. You can put bonds in your investment portfolio instead of your trading portfolio, and if you do that, you don't have to mark them to market.
Right.
So there are a lot of gimmicks that they can play to continue to adjust earnings and make the banks look solvent. And maybe the banks here in the States aren't quite as bad as condition as the banks in Europe, but as the economy continues to weaken too, the banks are going to remain under pressure. And I do think the economy is weakening now, and that has negative implications always for the banking system.
Absolutely no question about that, although President Obama would like us to believe differently. Let's talk about some of the numbers that are coming out. The unemployment numbers are supposedly getting better and better. I don't believe it. I don't know if you believe it or not.
I really am very skeptical of government numbers. I like to follow the work of John Williams of Shadowstats.com. I know you've had him on the show. And
great guy, yeah.
Great guy. He does some fantastic work, and I have a lot of confidence in his ability to go through the surface of those numbers and actually come up with what's really happening. And I don't think the picture is quite as good as the media, newspapers and television make it sound.
In all fairness to the media, and I am not a real fan of the conventional media. I don't even read the conventional media, for lack of better terms. I don't watch television, for example, because I think that the reporting is so skewed, either from a liberal standpoint or from a conservative standpoint, that you're really not getting, in my opinion, accurate reporting. But the one thing that the media is accomplishing is, I would maintain that 75-80% of the people in the United States are simply not aware of how bad things are. They're believing the media, and consequently, confidence hasn't fallen through the floor.
And I think that's one of the key things that the Internet has to offer. The amount of knowledge and information available through the Internet is truly staggering.
Oh, yeah.
And, I think people really have to start spending some time on the Internet and finding out what's really going on, not just in the States, but in the world.
Anybody who bases their financial decisions, their investing decisions, what have you, on what's going on in one country ought to have his or her head examined, in my opinion. Another question that we're getting on the show quite a bit is the possibility of QE3. Now, it's my contention that another quantitative easing, it's already happened to a very large extent, in my opinion. Bonds are being issued, the banking system is picking up the bonds, and that way the money is going out into circulation. So it's really already there.
Yeah, it really is. And another thing that they're doing is swaps. The European Central Bank is doing a lot of direct lending. Central banks are supposed to take care of short-term liquidity needs. The traditional process was that if a bank needed liquidity, they would give first-class collateral, borrow for a few days, and get over the liquidity crunch. Well, the ECB just announced a 3-year loan to banks. That banks took down €500 million euros worth of newly created euros, and they're going to do another one next month.
I'm not sure what the alternative to that is, given the gravity of the situation, but that to me is just an amazing course of action.
Yeah,
because it makes so little sense.
Yeah, exactly, and it doesn't solve the problem. The problem, of course, being a lot of bad assets on in the bank balance sheets that have to be repaid or written off, and there's just not enough capital in the banking system today to absorb those losses. So, the outlook for national currencies is still quite scary, and in that kind of environment, we've been talking about for years now.
Yeah.
Physical gold and silver are the safe haven to own because you don't have counterparty risk when you own a tangible asset.
Exactly. My philosophy about owning physical is really simple. I don't buy it for a profit. I don't buy it for any reason other than, as you taught me 10 years ago, it's the best insurance you can provide for yourself and your family against financial disaster. There is no way that in the total scheme of things you're going to lose if you have a certain amount of your capital into hard assets.
Yeah, the way I like to describe it is that precious metals are your savings.
Exactly.
Savings are always a good thing for a rainy day, just in case you need it. And the best way to save for the future is to accumulate precious metals.
Having said that, your outlook then for the markets in general for 2012 are?
Well, for the precious metals markets, I remain very bullish. I think we're going to go well over $2,000 in gold, and I wouldn't be surprised to see $3,000 gold sometime this year. I'm also very bullish on silver. We've gone through a nasty correction for 6 months. That correction, I think, is ending. I think the low for silver was also the first week of January. We nearly touched $50 in April of last year.
Right.
I expect we're going to go over $50 this year, and I wouldn't be surprised if it happens in the first half of this year. There's that much buying power in the market at the moment.
But something that I've been aware of, and the demand right now is very, very high for gold and silver. You guys out there, you got to do something that's really important for yourselves. Forget about me. You got to do it for yourself. We have a banner for goldmoney.com on our homepage. Click on it, get some information, see what you think. It is highly, highly endorsed by the Korelin Economics Report. James, thanks so much.
Thank you very much, Al.
For our upcoming appearance schedule, visit kereport.com. The Korelin Economics Report will be back in just a moment.